Welcome back to another weekly analysis video. This analysis is for the week of January 25th, 2026. As always, we'll start off with a review of last week's price action and then move on into the analysis for the upcoming week. So last week I was neutral going into the week, and I had said that I wanted to wait for the open and see how price traded on the open and in the beginning of Monday to get a feel for where it might trade. And I had a very slight bearish bias, as I had mentioned in the analysis. We did open with a gap down here in that area there, and that was on 6 p.m. on Sunday. Okay, and we traded down, as I said that we may. Okay, that was with my slight bearish bias. Now, we'll get into the review for next week, but look where it stopped. The equilibrium area of this overall range, which is a stopper and area below 26,244. And we'll discuss more on what I mean by that going into the analysis. But interesting where it stopped. Initial move down, and then from Wednesday and onward into the close on Friday, we traded higher. So once we got the information we needed, which was a gap down, my initial thought process was looking for lower prices, targeting first the stopper and area in here, which it was quickly hit, and then seeing if we could trade lower into this range here, which is again the equilibrium portion of this overall range here. Okay, there's a lot to weigh out. I mean, there's a lot of lines on this chart, and you don't need all these lines on the chart. You could actually have these levels written down on your notepads, that way the chart doesn't look all cluttered. But I don't mind the lines personally, so I keep them on my chart. But all these lines, they tell a story as to what the market will do. They provide me a narrative, and I simply just follow that narrative. So with that being said, let's go ahead and move on into the hourly chart. Alright, now here we are on our hourly chart, and let's draw your attention into our gap opening here, where it gapped down on the open on Sunday, 6 p.m., and that was January 18th. Okay, so here was our open on the close on Friday, on Friday, January 16th. Sunday, January 18th, 6 p.m., it gaps down, leaving a range of price that has not been traded through with bullishness and through with bearishness. So there's been no up or down candle, and that's what we needed to see it traded through like that, per the rules of ICT, the Inner Circle Trader, okay, to have an efficient market. Price gaps down, hits our first objective, which is a stopper and area below 25,515, and seeing if it can reach deep into the equilibrium range of this range in here. Okay. Notice how it propels away from that, higher. Moves out of this, blasts through 25,515, and then stays above it. Okay. Here was your midweek reversal in here. Once we had that midweek reversal and we start trading out of this range in here, that's our telltale sign that it's most likely going to move higher into 25,515 and potentially through it. But we always have to gauge price when it comes to these levels to see how it reacts. Okay? So we initially traded lower, which I did have a slight bearish bias going into the beginning of the week. Midweek reversal leaves this equilibrium range, targets 25,515, and now we're above it. So with that being said, let's go ahead and move on to the 15-minute chart. Alright, into our 15-minute chart, we just have a more refined view compared to that of the hourly chart. The overall nice trade of the week would have been on Wednesday, which would be in here. Now, you don't even necessarily have to be in it starting at around, 6:30, 7 o'clock in the morning. You could wait until the 9:30 open. The 9:30 open actually gives you everything you could ever want. 9:30 open, which is here, right there, it would allow for an entry, okay, because it drops back down in the middle of this range in here. So here's 9:30 right here. This, you could call it an indecisive candle right there. So it trades down. There's that wick there. The equilibrium portion, the middle of this range here, a discount, and then propels away from it. First objective would be the stop run area below 25,515. Okay, notice how it sweeps that area and then comes right back through it, comes back into this area again, and then repels away from it, through the stop run area, and then through 25,515. Okay. Monday was a holiday, Martin Luther King Day, and you saw me take a very conservative day trade on that particular day. I wanted to showcase something and show you that it is possible to trade during holiday volume. And I did not mention it was a holiday. Matter of fact, I actually forgot about it, unfortunately. And I realized it once I had woken up at 8 o'clock in the morning, realizing that, oh, it's a holiday. But nonetheless, the trade was still taken. The video was still made. However, I would not recommend that particular trade that I took on Monday. Just allow the holiday to pass and then move into the other days of the week. Tuesday, Wednesday, Thursday, Friday, etc. Okay? So the main trade of the week was on Wednesday, and that's what I want to emphasize here. Okay, so with that being said, let's go ahead and move on into the weekly analysis for the week of January 25th, 2026. Alright, so now we're back on our daily chart here. And it looks like it may want to move higher. Okay? We have propelled away from this area and we're above the relative stop run of the 25,515 level. Okay? Because it is still the beginning of the year, we're now going into February. I still have that little bit of hesitation to give a firm bullish bias because we're still in a consolidation in here, okay, and we have left a stop run area, so we could easily just sweep this area, come back through it, and come back into it again. Okay, however, we'll just go on record and say that I have a slight bullish bias going into the week. Now that could change on the open and going into the beginning of the week where I may see something differently. But for now, I have a slight bullish bias going into the week. Okay? So I am bullish. And the reason why I say slight bullish bias is because it's still the beginning of the year. Typically, I remain neutral in the beginning of the year and allow the market to show me its hand. Okay, so this might be the beginning portions of it showing its hand to me. And going in February, we can start seeing a more pronounced move. Okay, so that's what I'll be looking for going into the beginning of the week. And again, that could change. Okay, I am flexible at all times because I have to be. It's not because I want to be, it's because I have to be, especially with these markets. Okay? So let's go ahead and move on to the hourly chart. On to our hourly chart here, we see a little bit more of a refined view. And I want to draw your attention to this low up to this high. I do believe that it looks like it may want to reach down into the stop run area before going higher. Now, it would need to show support, preferably at this area in here, and then go higher. Okay. If we start going through here, it's going to want to target 25,515, and it may want to reach back down into here, at which that point the slight bullish bias that I have would change. Again, it's about weighing things out and being flexible, especially in consolidated and neutral markets like we're in now. Okay? Very important that you understand the flexibility point. Okay, because if you're not flexible and you have a firm bias, I'm bullish or I'm bearish and I'm not changing it. If you have that type of firmness in your trading, more times than not, it's going to go against you and you're going to get hurt from it. So it's always good to be flexible and to be willing to change your bias. Okay, especially when you see the market presenting things that go completely against what you initially thought. Okay, so again, prefer to see support right in here. Starts trading through here, it's going to want to target 25,515 and potentially lower, maybe into the stop run area below 25,515. Okay, I also want to discuss, we're going to zoom out a bit, for last week that we dropped into this equilibrium range of this overall range in here, which is the stop run area of 26,244. That is the macro view of it all. Okay, 26,244 is the main level that it's working around and keying off of. And because it's keying off this particular level, it's going to work off the stop run area, and as long as we remain above this stop run area, we should be, in theory, long-term bullish. Okay, even if we sweep it like we did last year in November, notice how quickly it got away from this bottom here and back into it. Okay, it's important that it does that if it's going to remain above it and remain bullish. Okay, notice how it dips in here and gets away from it. It pales through 25,515. So I want to see this bullish state hold and propel higher, targeting these highs, etc., into 26,244. That's what I'd like to see, ideally. Okay, let's go ahead and move on into the 15-minute chart. Alright, and on to our 15-minute chart here. Really not much more to discuss. I've discussed everything really I want to discuss. However, I will note that, again, it is always good to be flexible during this time of year, and really any time of year, to be honest, because again, I could be completely wrong because of the neutral conditions that we're in, and I have to change my bias. Okay, so while I do have a bullish bias going into the week, that could change based on the conditions that are currently present in the market. So with that being said, just going to go ahead and that is going to conclude the weekly analysis for the week of January 25th, 2026. As always, take care and God bless.